All right, we are back. Let's get to our call of the day. It is PayPal downgraded to market perform at Raymond James. They moved to the sidelines ahead of earnings on Thursday. You're not on the sidelines. You are in the game, Surat. You own it. So what are we to make of this call for a stock that, like many of the others we talked about not 5 minutes ago, have had a huge run to start the year? It's up 16% in a month.
Yeah, look, I mean, the stock was $200 a year ago. This is a no man's land stock. I mean, growth investors don't like it. Value investors think it's still too expensive. It's a show me story. They've had 3 really bad quarters of we tried to do different things. I think it's an execution story. If management doesn't do it, I think we're out of this stock. But it's in a great place in payments, and the stock actually has a lot of room to go. So we're looking for 5% growth top line, and that could fall to the bottom.
I mean, it's a no man's land stock, right? That's what you just said.
I seem to own a lot of those, by the way. So.
Well, I'm just saying, I mean, it doesn't sound like you have a whole lot of conviction behind this one if it's in a no man's land stock.
Well, no man's land, if you're a growth investor or value investor, if you're a core investor, yeah, I think this is where you want to be. Because the opportunity here for the upside for a company that has a great product but just been mismanaged for the last year.
But what does execution look like? Is it they need a stronger capital allocation strategy? Is it, to borrow the word that was so popular last week, better efficiency? What does that look like?
I think it's a combination of efficiency. Stop spending money on growth like they did, trying to buy customers that weren't there. I think you have a
return capital shareholders.
You could return capital to shareholders and also focus on your core business, which is payments. Focus on Venmo. Focus on making money as opposed to just trying to grow the business and buy Pinterest and do other things like just not in your core.
Does the CEO retire, like there's speculation?
I think the CEO might, if he does not perform, be forced to retire or choose retirement. But I think management's really in the hot spot. And you had a stock that everybody loved that was trading in the high 30s is now at, in the 20s. But what is earnings going to be, and how do you allocate capital to actually get this business going forward?
All right, let's talk about Dow, because Credit Suisse just upgraded it to outperform from underperform, okay? You upgraded it recently because you bought it.
Yeah.
Not that long ago.
No, about a month ago.
Okay.
Yeah. No, I think you're past the capacity increases in polyethylene. China is 35% of that demand. So if China is really coming back, as I believe, they should benefit. They've got great price mix. The stock trades at 6 times EBITDA, and it yields 4.7%.
It's like a quiet, nice mover year to date, 19%, right?
I like it a lot.
Price target $68. You own it in the Joe T.
I do, and it's an example of your friend Lee Cooperman, who's been on overtime and who has said that you want to buy stocks that report really bad earnings and have good price action. And last week's earnings, boy, those earnings were pretty bad. That was as bad an earnings report that this company has seen probably in the last 15 years, and the response to that was overwhelmingly favorable. So I like the entry.
Because you're at peak of capacity, right? So if you think it's going to improve.
And you can see the optimism that's in that report this morning that they're speaking towards in 2024. You could begin to see that take fruition.
All right, let's go to Diageo. Bernstein upgrades Surat to outperform. Price target to 225 from 215. It's a core holding of yours.
It is a core holding, and it's a staple that has growth. And we've been talking for a while about staples that are expensive. Here's a company that's well diversified across geographical sectors. I mean, you look at China's going to come back. That's where they've got a good part of their business. They're in the high end. They're in the low end. After COVID, a lot of customers have decided that they can drink at home or they can go out. So you're really in a sweet spot where they have good margin expansion and global growth.
All right, next, Disney. RBC reiterating outperform 130 price target. They're bullish into earnings. Steph, you first.
I do not want to own this for the earnings. And in fact, I hope that the CEO just kitchen sinks numbers, to be honest with you, in terms of guidance, right? There's a lot that they have to fix. I like it because I think he's going to be able to fix it. I just think it's going to take some time. So I'm not playing it for this quarter, right? We don't even know what the strategy is on streaming. The costs are out of control. Pricing at the parks is a nightmare. So there's a lot that they can do, but I just don't think that he's been in there long enough to see any kind of results that should surprise to the upside.
If he kitchen sinks it, he being Iger, what does that mean, do you think, to the battle with Peltz and Trian? Doesn't that strengthen Peltz's hand?
I would think, right? I mean, absolutely.
Whom you've already said you would be voting for.
Absolutely would be voting for, because I think there's a lot that they need to do, and I think he would be helpful. Why would you want help in a time when you have all of your businesses really struggling at this point in time, right? Why wouldn't you want that help and that support?
Surat, you own it too.
I own it too. Here's another no man's land stock, right? I mean, it was a growth stock, and now with all the things going on with streaming, their cost expenses, I think Iger's in there to try and fix it. You also need to talk about who's going to take over from him. I mean, that's not now, but to Steph's point, I'm not owning this for this quarter or even next. I think the sum of the parts of this company is worth so much more, and I think you have value creation here, and I think this is a good opportunity to get it.
But you disagree, because I asked you, I think the last time you were on and it came up, which I remember.
Absolutely.
Sorry for you that I remember.
No, because Ken Squire had sent you the note right 5 minutes before that.
But tell me, I mean, you vote with management. Steph votes with Peltz.
Okay, so I will tell you right now, I will give management the doubt. I think Peltz can do a good job in there, but he is not a media guy. He has not been in the media world before. Give Iger a chance, and if Iger can't do it,
You don't need a media guy.
But-
You don't need a media guy.
need a
but I don't
You
think.
need a guy.
But I don't think you need.
You got a guy that's not going to spend $71 billion on Fox, right? I mean,
but I don't
that
think-
ruined the balance sheet.
But I don't think you need. I don't think Iger needs somebody to help him at this point. He came in there to do change. He didn't come back because things were going so well, and so I don't think he needs that. In addition.
I think Peltz could speed up that change. I think that's my point. I think that Iger can absolutely. He can actually do a good job. But I think it's just going to take some time, right? And the whole reason I bought it was before Peltz. It was I bought it because Iger was in there. Then he came back, and he's going to fix it. So now I just think with Peltz in there, he could just move it along.
Then my only point is, like, if the board is only full of media geniuses, why are they in the spot they're in now?
Right.
Well, you could say the same thing about Comcast. You could say the same thing about anyone who went into streaming. It really hurt almost all. Look at Netflix. I mean, it's not like any of these stocks are doing well.
No, but I mean, the issues are much broader than
they're-
just spending
Yes.
a boatload of money on streaming.
I just honestly feel give Iger the chance, let him focus it. Now you got the distractions on the side.
They're going to have to be incredibly creative, though, aren't they? I mean, they have assets potentially like ESPN
Right.
that they could, do something with that. They could spin off or whatever the case. But they have to get creative in
You
some
have
regard.
to, and you're in an environment where the FTC and our government doesn't really allow mergers going on right now, right? So what are the companies doing to actually create value? They're spinning. Look at what happened with GE. Look at what happened with J&J, Glaxo. So maybe there's a potential there you spin something out and then kind of get value.
I don't think they're going to
creation
spin out ESPN.
that way.
That's the
No, I'm
free
not
cash
using that as
flow
an example,
horse.
but
They can't.
You've got to be, to your point, creative because there is value there.